great. So first of all, welcome to the Greater Pompano Beach Chamber of Commerce, serving Lighthouse Point and Margate. Paymaster is a trustee member of this chamber, so we truly value your membership. Romeo Chico is the proud founder of Paymaster and the core of the success of the company. He's a dedicated family man, and he and his wife of 30 years have 2 beautiful children. And I think I saw a picture of the pup online. It's like a Labradoodle. We lost you. I don't know. You were muted there.
There you go. Yeah, I'm sorry. A sheepadoodle.
A sheepadoodle. Okay.
Sheepadoodle. Yeah.
He was fluffy. I saw that. He resides in South Florida and is one of the most hands-on owners you will ever meet. He's strongly committed to both his family and business and takes both very seriously. He's willing to meet clients at 6 in the morning or late at night, whatever they need. His strong character and personal and professional ethics have set a tone for the day-to-day operations of his business, and he doesn't bring anyone into the Paymaster family unless they exhibit the same qualities. He's active in the payroll industry and sits on several boards, including the Independent Payroll Providers Association and the Payroll Fraud Protection Group. In 2016, he received the recognition for Member of the Year. Congratulations. And in 2019, he received the Outstanding Contribution Award from Independent Payroll Providers Association, an organization that he has been a charter member of since 1997. So you can see that he brings a wealth of knowledge to us. He serves on other boards and volunteers in various organizations. He has a deep-seated love of technology, and we're told he's got a quick wit, so we're waiting to see that today. But we're thrilled to have you with us, and as I said, I have listened to a couple of the Paymaster programs that he has put out through his own organization, and he has been a wealth of information. So we're thrilled to welcome you today. Thank you.
Thank you. And yeah, and I am happy to help anyone. You know, if you, since we're going to be all on mute during the presentation, you can put your question in the chat, and I'll try to keep an eye on that if something pops up. And you'll have my email address in the presentation. So I'm even if you're not a client, I'm happy to answer questions. I did a presentation 2 weeks ago, and I'm still getting questions from companies, and you know, and I'll answer them pretty quick. Kind of no matter what time it is or day. This is important, you know, for South Florida, for our business industry, you know, to you know, not only make sure that, you know, you are keeping your business afloat, but other businesses. We all rely on each other. So this is very important to me.
Yeah.
So let me share my screen, and we'll jump.
I'm not saying it would have been good.
Right in here.
I remember there was like 8 months where it was just like it was nothing but.
It looks like
Could
my
everybody please put their phone on mute? I'm trying to figure out who's not on mute here. If you're not on mute.
Oh, it may be me because I just came back in. Sorry.
Yeah, please go on mute so we can. Thank you. Sorry.
And if you can, it looks like my screen sharing is disabled. There we go. All right. All right, so you should be looking at my presentation. So my email address is here. I also have it on the last slide. And my quick disclaimer to this is this information has been a moving target since the day it came out. There are some weeks where there's a new change or development almost every day. You know, I was giving a presentation one morning, and you know, news came out while I was giving the presentation that something had changed. So, so keep that in mind as we go through this. If you are not on our email. You can go to our website, paymaster.com, and there's a button to sign up for our newsletter. And for the past, I think 17 weeks, I've been putting out a weekly email of important information, whether it's PPP or just payroll, HR related. I've been trying to push that out as fast as possible to everyone. There are funds still available. The extension was just made recently to August 8th. I believe this is the second time this date has been extended, or until the funds are gone. But it looks like about 120 billion has just been kind of sitting there and nobody's been taking. So if you haven't received the funds yet, there's still a chance. Although what I have been hearing is many banks have stopped accepting new loans. So you may have to go to the non-traditional bank, like a Square or PayPal or one of these fintech companies to secure a loan.
Thank you.
When you took out the loan, there was a whole page of certifications that you made, saying that you're going to use these funds for your ongoing operation. And the important one I point out is number 3 here, saying that you're going to use the funds to retain workers and maintain payroll. That is the title of this program. It's Paycheck Protection. And it was initially put out to protect the employees, to give them wages. It wasn't necessarily to save your business. It wasn't for you to purchase other things for your business. It was to pay your employees and to cover some overhead for you to be able to maintain those employees. This is an important certification because the SBA is looking at it that if you are spending those funds on other purposes, they can charge you with fraud. I've seen many news articles where this has already started. The act has put in place a special law enforcement arm to pursue these cases. So this special police department has its own funding in order to pursue. So the requirements of spending have loosened up a bit. But you still, if you did take these loans out, you want to use it for payroll or related purposes. We had seen stories early on where companies were using it to, redesign their operation, retool their equipment for things that were not intended, and those companies may see some problems. There was back in May a date set, I believe it was May 13th, where if you took the loan for some other purpose and you were going to use it as not intended, there was a date where you could have given the funds back and kind of wash your hands that you didn't take the loan at all. But since that date is long past, you are committed to spending it on authorized purposes. I found this graphic, and this almost perfectly represents what you have to do in order to get 100% forgiveness. It is a balancing act of 5 pieces, and kind of label them here as to what they are. It's the main one at the bottom is time. Then you have to balance payroll and non-payroll costs. And then on the payroll side, the amount of wages you pay and the number of employees you pay it to. So over the next several slides, I'm going to cover each one of these pieces and how to get your loan in balance here. So the main rock there, the foundation, is time. And initially you had 8 weeks. The Flexibility Act that was passed recently on June 5th says you can now take 24 weeks. I say if you have spent all the funds, as we'll cover in the next slides, within the 8-week period, I say file for forgiveness. But if you didn't spend it in 8 weeks, then your option is either have an unforgiven amount or just go 24 weeks. It was announced recently that you don't have to wait the full 24 weeks. So if you complete your spending in, let's say, 10, you can go ahead and file at 10 weeks. You don't have to wait the full 24. So that was good to hear. The date starts the day you get the money in your account. It is literally 8 weeks or 24 weeks. I've seen people say, well, it's 2 months or 6 months, and have that incorrect. So make sure you're counting days. And I say the day you get the funds, either count 55 days later or 167 days later to find your spending deadline. If you are using the 8-week period, there's what's called an alternative period. And if you pay your employees weekly or biweekly, you can elect this alternative period of time. And basically what it says is, well, the day you get your funds, you have some ramping up to do. Maybe you laid off a bunch of employees. You don't know when you were going to get the funds, and all right, today we get the funds. So what this alternative period does is says, well, you don't have to start that 8-week clock the day you get the funds. And I made this this graphic here to show you because I think this gives a better representation. So let's see on May 7th, you receive your deposit. If you're using the 8-week period, you would start counting on the day you got that deposit. The alternative method says, don't count the day you got the deposit. Instead, when is your first full pay period after that deposit? So in my example here, I am a biweekly payroll, and my biweekly pay period runs May 11th through May 24th. So if I get the deposit here, I can say, all right, my first pay period starts May 11th. That means I'm going to go through that entire pay period, and my pay period ends the 24th, but I don't pay those wages until the Friday after my pay period ends. So the first day I can count payroll can be May 29th. If I don't use the alternative period, then I'm using the wages that were paid on the 15th. So that could play a big role in determining your 8 weeks, because back when we got the funds, many companies had laid off their employees and they needed time to hire them back on. So using that alternative would give you a few days to hire them back, go through a complete pay period, and have a payday. So it can shift your payday ahead one pay period. If you're using the 24-week period, there is no alternative. It's 24 weeks from the day you got your deposit. Now that alternative period is only for payroll costs. Your non-payroll costs, you're still bound to an exact 8 weeks or 24 weeks. There was a lot of confusion early on because the way the act was stated, it said the funds had to be incurred and paid in 8 weeks or 24. But further definition, and it says that it's pretty much either or. It's either you incur the expense in that period or you pay it in that period. And we'll talk about that in a few slides here.
And Romeo, it's Holly. Just a reminder to look in the chat, because Richard had 2 questions. One being, rent is okay, yes, and do you have to hire the same people back?
Yeah, so I saw those questions pop up, and I know I'm going to cover them on a subsequent slide. So if I see a question come up and I don't get to it, I may be answering that for everyone very, very soon. So here we are actually at that first question that Richard put in, is rent is okay. So now that we got time out of the way, the next thing we're balancing is payroll and non-payroll costs. The non-payroll costs is what I have on the screen. It is rent, interest you're paying on a mortgage or other debt. I had a limousine company ask me a month ago. They said, we have auto loans. You know, can I have the interest on those auto loans? We have a fleet of cars. I researched that. The answer is yes. So a business auto loan, you can, unfortunately, well, it appears if it's a lease, you're out of luck because it is only interest on debt. Oops, I go back one. Utilities is electric, gas, water. This transportation, in the act, it's under utilities and it says transportation. I've done a lot of research on this, and there is a such thing as a transportation utility fee. It does not appear to me that it means, you know, gas expenses and, you know, I had to change the tires on my car and whatever else. I'm going to share my presentation here. So you'll be able to click on this. I have a link to what transportation utility fee is. I'd say if you don't know what that is, it probably doesn't apply to you. I wouldn't dance in that gray area and try to throw in gas and, you know, things like that. I don't think it's worth taking that risk. Same thing with telephone. They go by telephone. I have not found any proof that cell phone is included in there. It seems like another gray area. And my thought is, if you can cover the loan forgiveness amount and everything else, then, you know, don't throw anything in that could be a gray area. Internet access. So if you're paying for internet access through your cable provider or Verizon, that is also an acceptable amount. Each of these items has to be in existence prior to February 15th. So if you just turned on a new water or utility, that is not going to work out. In the loan forgiveness application, there's a whole page on documentation you will need to present to the bank. And any of these non-payroll costs, you will need to provide evidence that the service was in place prior to February 15th in order to get forgiveness on it. So they will be checking that. All right, there's a couple of questions. So back on the period, someone wants to do the 8-week period. You don't have to file for forgiveness, which actually I'm going to cover this later on. It's just for spending. You actually have a long period of time, which I'll cover, to file for forgiveness. So it's, you can take time on that, even though you've spent the money. And actually, another question I'm going to cover later on, and also the spending. So there's a few questions there I'm going to cover coming up here. All right. So payroll costs. Payroll costs is pretty much gross pay of anything you pay your employees, wages, commissions. You can give bonuses. I had a lot of questions about, you know, I want to pay hazard pay. I want to pay extra money to my employees who are coming back. So you can pay them whatever that is. Severance pay for any restaurants. This is an interesting one because cash tips. Your customers give your employees the tips, but you're allowed to claim it as towards forgiveness. So it's pretty much anything that's gross pay to your employees. Your cost of health insurance, your cost to the employee's retirement plan, and here in Florida, the only tax is unemployment tax. So an employer pays, you know, Social Security and Medicare, and you have federal unemployment. all of those taxes don't count towards forgiveness. So it's only unemployment tax. Each of these items, the health insurance and retirement, it is counted towards forgiveness when it's incurred and not necessarily when you pay it. So for example, on the retirement plan, there are some companies that I spoke with that only fund the employer portion like once a year in March. And so they're not going to pay that expense until many months from now, but you still can count it towards forgiveness because you ran a payroll that incurred that expense. Let's see. Now there are some payroll costs that you cannot exclude, or you cannot include, that you have to exclude. If you pay any employee more than $15,385, if you're using the 8-week, this was defined just recently that if you go 24 weeks, that has expanded to $46,154. So that is to a non-owner employee. And we'll talk about owners on the next slide here. That is the most you can pay them in wages. I don't know if anyone has this, but if you have someone who lives outside of the US, you can't count that person. There is the Families First Act that provides for federal sick and emergency family medical leave. This is a benefit you are required to provide to your employees, and the government will reimburse you for wages you pay under the Sick Act. So you can't count those wages because you're getting reimbursed for it anyways. So it's not a real expense to you. So you would exclude that. I had someone the other day concerned. They said that they didn't think they were allowed to pay FFCRA sick leave to an employee if they had the PPP, but that is not true. In fact, you're federally mandated to offer the Family First sick leave. And if you fail to do that, you can be in violation of a minimum wage violation with Department of Labor. So pay the wages if that case exists. You just can't use it towards forgiveness. We have many companies that reimburse employees through payroll. So reimburse them for maybe an auto or other expenses. You can't count that because it's not a payroll expense. And of course, any payments you pay to an independent contractor, those are not employees. So you can't count that. This is fairly new that they came out and said owners have a different limit than employees. An owner cannot be compensated more than $15,385 or 15.385% of your compensation for last year. So there are many companies that I talked to, and they were just going to pay themselves more money. But you can do that. Just you got to look at what you made last year, and that is your limit, or 15,385. If you're using the 24-week period, you're limited to $20,833. You do not get that higher $45,000 amount that you can pay to a non-owner employee. This is another piece that was kind of hidden out there. These limits for owners are across all businesses you own. So if you own 3 different businesses and each one got a PPP loan, you are limited to this total amount across all 3. You can put it all on one or divide it across 3, but the end of the day, this is your limit in totality. All right, so now we know what our payroll costs are, excluded and non-excluded. There's a balancing act of what you can spend the money on between the two, payroll and non-payroll. The Flexibility Act came in and said no more than 40% on non-payroll costs. That kind of means the converse of you need to spend at least 60% on payroll costs. If you spend less than 60%, you're going to lose forgiveness. And the easiest way I've been advising companies is, I think your non-payroll costs are somewhat fixed. Your rent is usually fixed. Your utilities are, don't fluctuate that much. So look at those non-payroll costs, figure it out for your 24-week or 8-week period, and then you know how much you need to spend on payroll. You need to spend the rest. So I've come across many companies that they have a very small business or run it out of their house and have a lot of employees. So your non-payroll costs are going to be minimal. So they may see themselves spending 90%, 95% on payroll, and that's okay. You can spend 100% on payroll costs. You just can't go below 60%. If you do, I wanted to provide this calculation here. So an example is a $100,000 loan, and we spend 50 on payroll, 50 on non-payroll. Of course, 50,000 is only 50%. So you take the amount spent on payroll divided by 0.6. That is 83,333. The difference between that and your loan amount is what is not forgiven. So by not spending $10,000 on payroll, I lost $16,000 in forgiveness. So it is it's important to look at these numbers and make sure you spend accordingly. All right, so another one of those rocks that we're balancing, which goes to some questions here, is our full-time equivalent. Let me just see questions here. All right, so full-time equivalent is, and we're going to talk about how you count that. You are to look back at one of two periods of time. Either you look back to 2019, February 15th to June 30th, or earlier this year, January 1st to February 29th, so the first 2 months of the year. They suggest if you're seasonal, you use the 2019 numbers. I've seen articles that say you have to use the greater of the two. That is not true. You use the lesser of the two. It's a lower hurdle you have to meet. This took a while for SBA to come out with, but they finally came out with how you count a full-time equivalent employee. You still have to, well, there's still some uncertainty, so some of this is my opinion. So we're saying your salaried employees, you count them as one. Your hourly employees, you take their total number of hours. I say you exclude overtime from that, and you divide it by 40 hours for each week. So if you're looking at a biweekly payroll, you total your hours, exclude overtime, and divide it by 80. So here in my example, I say, all right, I have a biweekly payroll, 2 salaried employees, 13 employees paid 842 hours. We take the 842 divided by 80, we get 10.53. SBA says you round it to the nearest tenth. So I have 10 and a half employees plus 2 salaried. I have 12 and a half FTEs. Even though I have 15 employees, my equivalent is 12 and a half. The SBA came up with an alternative method for counting. They call it the simplified method. And they say you assign 1 for anyone who works 40 hours. You assign a half for anyone that works fewer than 40. So that could mean you have someone that works 39 hours. They count as a half. You add up the numbers and that's your FTE count. So in my same example, I have 13 employees, 2 salaried, and my 13 employees all work 35 hours a week. So 13 times a half is 6.5. My 2 salaried who work 40, I have 8.5 full-time equivalent. So you can see between the 2 methods, you get very different numbers. But whatever method you use for counting your look-back period, January and February, just use the same method to count during your covered period. So if you're using the 8 weeks, you perform this calculation, see how many employees you have in the 8-week period. Do the same calculation January, February to see. And this goes to a question, do you have to hire the same people? And we'll cover some of this. There are reasons to exclude someone from your count. So if you counted them back in January, February, there's a chance you can remove that person from the count and you don't have to replace them. I've had many calls about this situation here where the employee is out on unemployment because we laid them off back in March and they got on unemployment. And in the state of Florida, someone on unemployment can be making $875 a week, approximately. That person could have been making $10 an hour for you. So when they were working for you, they were making $400 a week. They're on unemployment making $875 a week. So now you get your PPP funds, you call them up, you say, hey, I can repay you, we're gonna partially reopen. And that employee says, no thanks. I'm making more than twice as much and I don't have to leave my house. If you get that, what the SBA is saying is you make that offer in writing to the employee. I don't think they mean necessarily mail them a letter. In writing, these days, send them an email, send a text message, send them some means in writing. And if they reject that offer, and the rejection does not have to be in writing, you just have to document it. So if you send a text and then they call you up and they say, no thanks, I'm not coming back. If it were me, I'd take a screenshot of that received call. I'm going to take notes, document. That person, you do not have to replace. The other side of that is you will need to inform the state of Florida that that person rejected your offer for work. Then what's going to happen is eventually this is going to catch up with them. And the state's going to say, it looks like you rejected an offer for work on May 1st. And we've been paying you unemployment benefits up until August. That person is going to have to repay all that money that the state paid them. So it's not going to work out the way that that separated employee had intended. There are other reasons to exclude someone from your return to work count. And that is if you terminated that person for cause. In the state of Florida, and the employer's handbook has a whole list. So if someone was intoxicated while at work, you have cause to terminate them. You don't have to replace that person. If someone resigned, they resigned from work for whatever reason, you don't have to replace that person. And unfortunately, if someone passes away, you don't have to replace. All right, some of these other questions I'm going to be covering. The Flexibility Act that was passed last month came out and said, all right, there's new reasons to not replace people. And this is an interesting one. They said if the government comes in and says you're restricted to open, then you don't have to replace that worker. So this is interesting. So if you're a restaurant and you're limited to 50% occupancy, that kind of can be translated, well, I only have to hire back, or I can only hire back half of my employees. So in that case, I don't have to replace half of my employees. Or if you're unable to hire a similarly qualified employee for an unfilled position. I'm not quite sure how that falls in, because if you laid someone off and you try to hire them back and they say no, you don't have to replace them. So I'm not quite sure this unfilled position, what that means. I don't know if you fire someone not for cause, do you not have to fill that position because you can't find someone with similar qualifications? So this one is a bit of a gray area in my opinion. So we know what our FTE count is. We look at our look back period. If your number of employees fluctuates, well, that's what your FTE count. It's a full-time equivalent. So if if I look at my 8 weeks, let's say, in January and February, and I count all the hours, exclude overtime, I get my FTE count. That is an average. So if your employee count goes up and down during the period, you've accounted for that. Same thing during your covered period. When you're paying the employees, if your count goes up, goes down, it's fine. You're going to get that in this full-time equivalent. There's no issue with hiring more people. So if you have more than you had back then, that's fine. You just don't want to be short. Because in my example here, the math is pretty simple. If you had 10 employees that you need to replace and you only end up with 9, you had a 10% reduction, you lose 10% in forgiveness. And each of these forgivenesses losses are stackable. So if you only spent 50,000, going back to my previous example where I didn't spend 60%, I spent 50%. So I lost 18,000 there. And now I didn't hire back all of my employees. I lose another 10% off the top. So I lose another $10,000. So it is a stackable unforgiven amount. This item is mistranslated more often than not. I've seen national news organizations come out with incorrect information on this. And it's easier than it to comply. It says a reduction in wage or salary. But what people miss is that the reduction is not due to lesser hours. So if I have an employee, they get $10 an hour, and earlier this year, that person was working 40 hours, so they're getting $400. Now I have less work, and that person is only getting 20 hours a week, so I'm only paying them $200. That is not a reduction in wage or salary. It is not. They got less, but it is not what this act is talking about, this part of it. This is if you reduce their wage rate. So we had some clients early on that consulted with us that said,
I know.
that said, all right, I'm paying my employees $20 an hour. I can't afford that, but I don't want to terminate anyone. We have less work. Can I reduce their wage to $15 an hour? That is what we're talking about, is you're reducing an hourly rate. We have another client that they were reducing all of their salaried employees' wages. So in my example here, if you reduce someone's wage from 20 an hour to 15, that's okay.
No, it's
Or
not.
someone who's salaried from 2,000 to 1,500 a week, that's okay. Just you can't reduce it by less.
What is that? This is the PPE
I have
forgiveness.
calculated or show you how to calculate this.
If my pay was reduced by $1, I wouldn't make it.
Somebody is on mute there. So I have this calculation here. It is kind of easy, kind of complex. Like I said, if you didn't reduce anyone's wage or salary, you don't have to worry about it. But basically what you do is you look at how much that person was paid in the first quarter, you annualize it, you figure out how much they were paid in your covered period, you annualize it, and now you have apples to apples to compare. So you can see if there's a reduction. Unfortunately, this calculation would need to be done on an employee by employee basis. So if you have 100 employees, you would need to perform this calculation on each employee individually. If you replace the employee with another employee, this is disregarded. So if I had someone making $20 an hour and I terminated them back in March and I replace it with someone else, I only pay them 10, this does not play a role. This is ignored because it is not the same person. You did not reduce their wage. So it is kind of complex, but like I said, it doesn't apply in as many cases as we may think. A couple of just notes here. Don't use a credit card to pay any of your bills. That may not be seen as you made a payment, so use checks. Probably wouldn't use cash either. Documentation is critical, and we're going to talk about that in a minute. And this third bullet point here, I think it was one of the questions out there also. And I know it's kind of at the end of the, we're kind of in the ninth inning, so for some this may be too late. But I know many were opening up a separate bank account to put your PPP funds in. And as a payroll service, we started seeing a lot of companies reaching out to us, asking us to change the payroll account to this new bank account. And once I realized what was happening, I try to put a stop to it. You really don't want to have your payroll coming out of a separate account. Sure, you can have a separate account with PPP funds, pay your bills from it. But if you have a payroll service, don't change your bank account, because the problem is what comes out of your bank account, first off, is net pay. You're allowed forgiveness on gross pay. So there's an apples to oranges comparison there. The second piece is a payroll service is going to debit your bank account for the total tax liability. And that tax liability will include taxes that are not forgiven, so your Social Security tax and Medicare. So now there's more money coming out of that account that is not forgivable costs. So if you did change your bank account with your payroll service, you're going to have quite a bit of reconciling to perform, because it's going to be a mess. All right, so now I think we're going to cover a lot of these questions that have been coming up here. The forgiveness you will apply through the lender that issued the money to you. Some of them have opened the forgiveness process, some have not. You just have to check with your lender. Document everything. As I said, if there was an employee that you made an offer to and they rejected, documented, of course, all of your bills, your payroll registers, payroll tax returns. Your bank may ask you for all of that documentation. The forgiveness application, the first one that came out, is 11 pages long. One whole page is about documentation. And I think 2/3 of that is documentation that you're going to need to turn in. The other third is documentation you need to have if you become subject to an audit. You don't have to file for forgiveness right away. The Flexibility Act says you can wait 10 months after. So for many, there's no rush. You have to wait until maybe a bill comes in or payroll tax returns are filed. We had some companies that their forgiveness period ended like June 29th, and they were asking for their second quarter tax returns already. They're like, we have to have it. We have to file for forgiveness. And I'm like, you don't. You can wait. You wait until you get those returns. When you file, the lender has 60 days to make a decision. If your loan is less than $10 million, the decision is made just between you and the bank. If your loan is more than $2 million, you will have a review by SBA and Treasury, because they said if you have that much payroll, there's a very high chance that you had access to other funds. And one of the certifications you made was, I don't have access to other funds, and this was my only source of getting money to pay my employees. So that there was a lot of controversy back at the beginning when Shake Shack and Ruth's Chris, all got loans, and they said, we took the loans. We're allowed to. It's for the SBA, and we're going to pay it to the employees. We're not keeping it for ourselves. But kind of the question there was, do you have access to other money? Can you issue stocks? Can you do something else to get the funds? There is a 6-year retention period on documentation. So you file for forgiveness, 60 days later, the bank gives a decision. Hold your documents for another 6 years. Put it in a box, store it somewhere, because you could get a visit to ask for documentation. Recently, they came out with the EZ form for forgiveness. And I just put a screenshot in here this morning to show you how easy it is. Not everyone can use the easy form. If you do have to use the long form, it is long. There's a lot of schedules to it. But you can see it's just basically, what are your payroll costs, interest paid, utilities paid, what's your loan amount, did you spend at least 60% on payroll, and there's your forgiveness. Basically, you are certifying on this that you brought back all of your employees, you didn't reduce anyone's wages, you spent everything that you should have. So if you can use this form, then you can look through the instructions to see the requirements. Use it. There has been talk in Washington about automatic forgiveness of loans under $150,000. The discussion is that the average small business is going to pay approximately $2,000 in costs to get a loan forgiven. They may need to hire their accountant. They may need to hire a consultant. And in Washington, they're saying, we can save small businesses billions of dollars because the number of loans at $2,000 a piece, that is a lot of money we can save small businesses if we just forgive everything under 150. That is still pending out there. I've been keeping an eye on it, and again, I'll put out some information if that comes about. But I saw using 8-week period, banks will hold off on filing. All right, this was an interesting twist that has come out a few months now. And it says in the act, normally when debt is forgiven, it is taxable. So, if you owe money to someone and they say, okay, you don't have to pay, you just have income, and that's taxable. So the act came out and said the PPP loan is forgivable debt, but it will not account as income. So the IRS came about on April 30th, and they put out this notice. And again, when I share this this presentation, you can link to it. The IRS says, you know what, we're not going to count the income as taxable, but all the expenses you just paid, you didn't pay those expenses with your money, so you can't take those expenses as a deduction from your income to determine taxable income for your company. So you end up having taxable income from this. There's been a lot of talk in Washington that in Congress and the Senate, they're saying, wait a minute, we said this is not going to create a taxable issue. And if you don't count the expenses, that is going to create a taxable income, basically. So April, let's see, May, June. So we're about 2.5 months in. I am surprised that more has not come up on this. It seems to have settled. So it will be interesting if this thing sticks, and you will have end up taxable income as a result of this. The non-forgiven portion is a 2-year payback, except for loans that were approved after June 5th or on or after June 5th. If you got your loan prior to that, you have 2 years. You can go back to your bank and negotiate with them. It has to be mutually agreed upon with your lender to extend anything that's non-forgiven to 5 years. So it's not an automatic. I've spoken with some banks and they're like, we're going to play it by ear. You know, if you end up owing $10,000, they're like, you know, we may not go 5 years. We may want it in 2. You know, if you have a big amount you owe, you know, they may be more flexible in extending that. It is a 1% fixed interest, no loan fees, no prepayment. And like I said, you have 10 months to file for forgiveness. So there's also a payment deferral. So your first payment is not until 10 months after the end of the forgiveness period. So you have some time to make that first payment as well. Again, in this presentation, try to get your information from a reliable source. Again, there's a lot of unreliable sources out there, even national, trusted news organizations. I think some of them are not professionals in the industry, and they read something and translate it a different way than maybe it's intended. I look at 2 sources, Treasury and SBA. They come up with new documents and information almost weekly. On our website, we have paymaster.com/COVID-19. I try to update as much there as possible, as well as on my blog. So let me take a look, because that is the end of my presentation. So I'm going to look through the questions and kind of go over everything. So there's a question, a link to the EZ form. I'm going to put that in the chat. But if you go to treasury.gov, you'll find it there. The loan amount I requested was too low. My business. Yeah, so if you applied for a loan and you got money, you can't go back to get more money. I did find a number of banks, when this first came out, incorrectly translated the SBA. And I had companies asking me for information that I just questioned. I'm like, why are you asking me for state taxes, state income taxes? That has no bearing on your loan amount. And I found banks were asking for information that was causing them to calculate the maximum loan amount incorrectly. But unfortunately, if you got a loan amount and it was too little for whatever reason, there is no going back. Here's the link. Put the link out there. How does the employee count on work? Yeah, so fluctuating number of employees. Again, the FTE is made to count your average number of employees over a period of time. So fluctuating is fine. If you end up with more, that's great. I've heard some people saying they should hold off for forgiveness. So maybe you've spent all the money and you want to hold off. My thought is if you spent it and you've spent it on forgivable items, you've met the requirements, I say to file it now, because I don't know if things would change for the worse, but things have been changing. And who's to say it doesn't change in a direction that is not in your favor? So if you when you file for forgiveness, you're bound to the rules at that time you file. Someone put their funds into their normal operating account. That's fine. There is no need to segregate funds. Some people thought we had to keep it separate and, literally separate. You don't. There's nowhere in the application that you have to show bank statements to show the money was separate. You are only documenting and proving you spent it on forgivable costs. And they don't care what bank account that canceled check or, that it was paid from. So spending out of one account is fine. You know, whether you do 8 weeks or 24 weeks, again, I think that just comes back to, did you spend everything in 8 weeks? If you did, you know, you're done. And if not, you know, once you hit that time you spent everything. So I had one company the other week that said, we don't want to go through the hassle of giving our lease agreement and getting utility bills and all this other nonsense. They said, we just want to go based on payroll costs. It's easy. I can give you payroll reports, payroll tax returns. I can give that to the bank and be done, and I don't have to go through everything else. But in order to do that, I have to go 12 weeks. I was like, that's fine. Spend it 100% on payroll costs. 12 weeks is up. File it, and you don't have to worry about all the other documentation that you may need if you're doing non-payroll costs. You know, I think I've covered all of the questions out there. I don't know if there's any new ones anyone wants to throw in there. I did put in a link to the EZ form. I'll put a link out there to the non-EZ form. And these forms have changed 3 times, or the main form has changed 3 times since it was issued. So keep that in mind when you do go for forgiveness. You know, go to Treasury. Right at the top of U.S. Treasury is a link that says COVID-19. And on that page, you'll find the forms. It looks like the latest form I have was revised June 16th. But like I said, that's the 3rd revision that I've seen. And actually, that means it hasn't changed in a month. So that may be good. They may be settling in on that form. So.
Well, that was great, Romeo.
Oh, yes.
I think this is fairly confusing. I think it's definitely the most challenging part of this process. And I think you made it very understandable and really something easy to figure out with the formulas that you gave everyone. So,
yeah. And I'll send you the presentation.
Oh, great. Thank you.
So if you want to share it with
yes, we'll put that
with
up.
everyone
That's
here,
wonderful.
or post it.
We
so
did
like
record today, so we'll probably put that out for folks because, again, I think this is going to be the most challenging part for everyone. I did want to just let everyone know EIDL, which is separate from what Romeo was talking about, ran out of funds yesterday. So that doesn't mean you're not getting it. If you had a loan application in process, you could possibly still receive funds. The Chamber's funds took almost 5 weeks to be funded. So with no contact in between, just one day we got a check. So yeah. That's
many
kind of
people
the way it goes. Yeah. The Chamber, however, isn't eligible for this PPP, unfortunately, as a 501c6. We're still hoping and praying if this money sits out a little longer, there might be an opportunity for us to come back. But I hope everyone else took advantage of it. I think these programs are unprecedented from the SBA standpoint. And for most of us, there is no other way to get access to capital during a time like this when the economy is in a downturn. So.
And and one little point on the EIDL, if you did get the grant portion of that, so up to $10,000,
right,
and you got a PPP,
yeah,
you lose the $10,000 off of your PPP forgiveness. So
right.
if you got a $100,000 PPP loan and you got the EIDL and $10,000, the most that will be forgiven on the PPP is $90,000. So again, they're not letting you double dip.
Right. But what a great program. Thank you so much.
Yeah, you're very welcome.
Anybody else have questions, or are we good? All right.
All right.
Thank you so much for your time today. And thank you to Holly. I still see her on
Thank
there.
you.
So
Yep.
for connecting us all up. And
Thank
great
you,
job.
Ron.
All
right.
right. Everyone have a great day.
All right.
And
Bye-bye, everyone.
repay your PP loans. PPP loans. Right?
See some of you again later.
Bye.
Bye.
Bye.